Sam, always great to have you with us. It's been a very busy start to the year with a lot of action in Washington. What's your general take on the mood of the markets?
Well, John, good to talk to you again and Happy New Year. I think the markets are feeling optimistic that with the new administration, which seems to be much more business friendly, also likely to bring down regulatory constraints, that there could be some good moves, particularly in the cyclical areas. Since the recent bottom on January 10th, in which the S&P had lost almost 4.5% since the December 6th all-time high, we've seen the greatest growth coming from the industrials, the materials, and the financial sector. So it sort of seems as if the reshoring is the theme that investors are playing right now.
Now, in terms of the period we're in, we're coming off a couple of very strong years for the stock market, as you know, and there's also a lot of historical data around what tends to happen after there's a change in the White House. Obviously, it's sometimes hard for investors to just look at the average when there's nothing average about Donald Trump and the way he leads. Nevertheless, what does history tell you about this kind of environment for the stock market?
Well, it tells me that it's likely to be at least a good year, but maybe not a great year. I say that because we are in the third year of this bull market, and historically, of the 11 bull markets that celebrated their second birthday, the 12-month later, the average gain was only 2.5%, and with only 3 of those 11 posting double-digit increases. Speaking of double digits, typically we only have a 1 in 5 chance that we end up having a three-peat or a third successive year of double-digit gains following a down year. And then lastly, first year of a president's term in office, we have had almost 90% of those times where we had declines of 5% or more, averaging 17+%. So I think certainly a good growth for this year, but an increase in volatility is likely.
Now, you mentioned cyclical stocks, but what about technology stocks? Because there's been so much focus. I mean, even you had the tech CEOs gathering there in Washington, a reminder of which companies are deemed to be the most powerful and perhaps most influential in the modern day American economy. What do you think the story around tech stocks will look like as we roll through the rest of the year?
I still think it's going to be favorable because I did a study looking at those sectors and industries that did well between Election Day and Inauguration Day, and did they carry that momentum into the full year of that president's term in office? And the answer was yes, that sectors added about 100 basis points of outperformance, beating the market about 75% of the time, but the top 10 tended to double the market's performance, top 10 sub-industries, that is, and a lot of them come from the tech area. So you got to let your winners ride, in my opinion, based on the performance leading up to the inauguration.
What else are you going to be watching? What do you think are some of the themes that maybe don't make it into the headlines that are worth consideration if you're investing in the stock market this year?
Well, certainly Wall Street likes to climb a wall of worry. And early in this year, the worry was, where is the 10-year yield headed? Will it top out at 5%? Will it go to 5.5% or even worse? Now we're actually seeing the 10-year yield sort of undulate between the 450 and 475 area. And our belief is we'll probably see it head down to the low 4% by the end of the year. So where interest rates are headed is one question. What about the Fed? We certainly don't want the Fed to be too dovish, because that could reignite the bond vigilantes into saying that, no, the economy is strong enough. We don't need additional stimulus. So that's a factor. I would also think about the stickiness of inflation. We still think that the trend will be lower as the year progresses, but obviously there's always the possibility that we're wrong. And then lastly, geopolitical events, with the likelihood of additional trade tariffs on China, with restrictions on Russia. Who knows what the retribution will be, and that's something investors will have to plan for in the future.
And on the tariff talk, how is the team at CFRA Research approaching the potential inflationary effects. What generally is your view on that possibility?
Well, I think what we're viewing it likely as being more of a negotiating ploy where the president wants to get some changes from its trading partners. I don't think he wants to reintroduce the Smoot-Hawley tariff of 1930, which exacerbated the Great Depression around the globe. So our belief is that we're not necessarily going to be factoring in just yet what we think he's going to be doing, because that could be like attempting to forecast changes that the Fed would have to be involved with. So my feeling is that, yes, we're aware of it, but it has not changed our forecast on inflation, on interest rates, and on corporate profits.
All right, Sam, hang tight. We want to talk about some individual stocks.